You'll find the link to the AI voiceover market update in the description and pinned in comments below. Most people lose money in crypto for one reason, and they usually only realize it when it's already too late. It's not just bad luck. It's not that the market is completely rigged against you. It's that most beginners are chasing the wrong opportunities, while the real money is hiding in plain sight. What if you could learn to see what almost everyone else is missing? In this video, you are going to discover the hidden side of the crypto market that nobody explains clearly to beginners. You will see the real opportunities that most people ignore. You will understand the adoption trends that are quietly building a new financial system. You will learn which emerging sectors are attracting serious money before the crowd arrives. And most importantly, you will see how to protect yourself from the exact risks that wipe out new traders. But there's one dangerous trap almost everyone falls into at the start, and I'll show you what that is in just a minute. If you want simple, beginner-friendly crypto education without confusing jargon, you're in the right place. We break down the crypto world into clear, step-by-step videos that help you avoid expensive mistakes and spot better opportunities. So, if that sounds useful, consider subscribing now so that you don't miss the next videos that build on what you are about to learn today. Alright, let's start with the hidden truth about where real crypto opportunities actually come from. The hidden truth about crypto opportunities. Most people think big crypto wins are all about luck or guessing the next coin that explodes. But there's a pattern behind every massive crypto win, and once you see it, you can't unsee it. Imagine crypto like real estate in the 1970s. Most people only invested when skyscrapers were already built, prices had already exploded, and everyone was talking about it. By that time, the easy money was already gone. The same thing is happening in crypto today. Beginners pile in when a coin is already trending on social media, already on the news, and already pumped. That's when the risk is highest and the reward is lowest. The real opportunities are usually early. They appear in places that feel boring, confusing, or even a bit invisible. That means undervalued sectors, new adoption waves, and projects that have real use cases but not much hype yet. Here's the scary part. If you wait until your friends are talking about a coin, you're usually late. By then, the early investors are getting ready to sell to the late ones. But if you learn how to spot a few key signals, you don't have to gamble. You can position yourself before the big wave hits. there's one particular signal that has appeared before every major crypto rally. Almost nobody talks about it. In the next section, I'll show you exactly what that signal is. The adoption wave nobody is watching. Right now, there's a silent revolution happening in crypto. It's not happening on Twitter. It's not happening in meme coins. It's happening behind closed doors. In banks, in governments, and inside big companies that almost never talk about their plans until they are ready. While most people are staring at Bitcoin's daily price, these institutions are quietly building infrastructure. They are testing blockchain payment systems. They are exploring central bank digital currencies. They are building custody solutions so large funds can safely hold billions in crypto. This is what real adoption looks like. And here's why this matters to you. When institutions build, they don't build for a quick flip. They build for years, sometimes decades. So when you see serious adoption from countries, banks, and global companies, it's a strong signal. It tells you this technology is not just a temporary trend. This institutional wave is one of the big signals that often appears before long-term growth. But there's a catch. By the time most people notice it, the best opportunities are already taken. Here's something most beginners don't realize. The huge share of crypto activity is happening outside of the loudest markets you see in the news. The action is spreading globally, quietly. This is one of the reasons price charts never tell the full story. But we are still just at the infrastructure level, because buried inside this adoption wave is one emerging sector that could completely change how we invest in almost everything, and almost nobody is ready for it. That's what we are talking about next. The emerging sector poised to explode. When people think about the next big thing in crypto, they usually say DeFi or NFTs. But there's another sector that could be much bigger. It's called real world asset tokenization. In simple terms, this means taking real world things like stocks, bonds, real estate, or even gold and representing them on a blockchain. Imagine buying a fraction of an apartment building the same way you buy a coin, or owning a tiny slice of a major company's stock without needing a traditional broker. Banks are testing this right now. Governments are studying it, and traditional finance is slowly waking up to the idea that almost any asset can be turned into a digital token. If this goes mainstream, it could unlock trillions of dollars in value and create entirely new markets that don't exist today. Now here's where greed and opportunity collide. Being early to this sector could be like being early to Bitcoin before it was mainstream. No one can promise results, but the potential is huge. Most beginners still think crypto is just about buying random coins and hoping for a pump. They have no idea this deeper layer exists. But just knowing about these opportunities isn't enough, because there's a darker side to crypto that destroys beginners every single day. In this in the next section, we will talk about the exact risks that wipe out people and how you can avoid becoming one of those horror stories. The risks that wipe out beginners. Let's be honest. People don't lose money in crypto because they are stupid. They lose money because they are uninformed, rushed, or emotional. There are three big killers you need to watch out for. Number one, scams and fake projects. These look professional. They use nice websites, big promises, and sometimes even fake influencers or fake partnerships. They rarely look obvious from the outside. Number two, second is leverage trading. This is when you borrow money to trade so your wins are bigger, but your losses are also bigger, sometimes much bigger than your entire account. It feels powerful until it wrecks you. The third culprit is emotional panic. Buying because everyone else is excited, selling because everyone else is afraid, letting fear and greed control your decisions instead of a plan. These three things destroy more beginners than any single coin or project ever will. I once met someone who lost $50,000 in a single week because he didn't understand how leverage worked. He wasn't dumb, he was just unprepared. He assumed the platform would protect him. It didn't. Stories like that are sadly common. But here's the good news. You don't have to make those mistakes. There is a simple framework you can follow to protect yourself while still taking advantage of real opportunities. And that's exactly what we will go through in the next part. The beginner's framework for crypto success. There's a simple 4-step framework that separates people who survive in crypto from people who get wiped out. Step 1, education first. Never invest in something you don't understand. If a project sounds too complex or too magical, slow down and learn before you put in money. Read beginner guides, watch breakdowns, ask questions. If someone can't explain it in simple language, they probably don't fully understand it either. Step 2. Start small. Treat your first investments like training. You are learning the platforms, the wallets, and your own emotions. If you are going to make mistakes, it's better to make them with small amounts rather than your entire savings. Step 3. Diversify. Don't put everything into one coin just because it's trending. Spread your risk across different assets and sectors. If one part of your portfolio fails, it shouldn't destroy everything. Step 4. Think long term. Ignore the daily noise. Prices move up and down all the time. Zoom out. Focus on the bigger trends, adoption, and fundamentals instead of 5-minute price candles. This framework sounds simple, but it's exactly what most people skip. And that's why most people lose. Now, even smart people who follow this framework often make one big mistake. They think the goal is to find the next 100x coin. In the next section, I'll show you why that mindset is so dangerous and what the pros do instead. The mistake most viewers make. Here's the twist almost nobody tells you. The pros are not obsessed with finding the next 100x coin. Sure, that sounds exciting. It makes great headlines. But in reality, most of those attempts fail, and people end up gambling, not investing. The real secret is much more boring and much more powerful. The pros focus on consistent compounding growth with controlled risk. Instead of asking, how do I turn $100 into 10,000 by tomorrow? They ask, how do I steadily grow my wealth over years while avoiding getting wiped out? One path is gambling, the other path is actual wealth building. That's the shift that changes everything. And it leads directly into the biggest insight of this entire video. The big insight that changes everything. Here's the truth that changed everything for me. Crypto is not about getting rich quick. It's about getting rich for sure. Not through hype, but through being early, informed, and disciplined. The opportunities in crypto are very real. The risks are also very real. But once you understand adoption trends, emerging sectors like tokenization, and the main risks to avoid, crypto stops feeling like gambling. It starts feeling like a calculated long-term play. If you start learning and positioning yourself now, you could be ready for the next big wave instead of chasing it from behind. If you wait, you'll probably end up watching other people win while you're still trying to figure out how all of this even works. This is the moment where most people either step forward and commit to learning, or they choose, or they close the tab and forget everything they just heard. You get to choose which one you become. If this video helped you understand crypto a bit more clearly, that's just the beginning. Subscribe if you want to stay ahead in crypto without wasting years on trial and error. Every week we post beginner friendly breakdowns that turn confusing crypto concepts into simple practical lessons you can actually use. You don't have to figure this out alone. Join the community of beginners who are finally getting crypto right. Before you invest in any coin, there's one more thing you absolutely need to know. In the next video, we dive into whale tracking and on-chain analysis. You'll see how big players move their money and how normal retail investors use blockchain data to spot huge moves before they happen. That video could save you from one of the biggest beginner mistakes in crypto. Click on it now and I'll see you there.